Welcome to 2025. I don't know about you, but with the holidays falling on the Wednesday these past couple of weeks, I really trying to figure out whether I'm just living a series of Mondays or a series of Fridays. Office was closed, of course, on Christmas Day, but open all the other days, and then closed on New Year's Day, but then open the Monday, the Tuesday, the Thursday, the Friday. So yeah, just kind of a weird way how the holidays fell. Hope your holiday season was fantastic and I guess more importantly, safe. Certainly tragic events happening this past week in multiple locations. It really does mar the start of the year pretty significantly. From a market perspective, 2024 was or wound up being a pretty good year for the market, particularly on the heels of 2023, which was also a good performance year. And in fact, the combination of 2023 and 2024 made for the best consecutive years for the market since 1997, 1998. So about 25 years, if you will, that it took to repeat that record of strength in consecutive years. Certainly, the market did broaden some as other companies and other industries contributed to that overall performance. But the heart of the performance still is dominating courtesy of big tech, the Magnificent Seven, as they are known. That includes companies like Amazon and Facebook and NVIDIA and all of that. That collection of 7 companies actually last year accounted for over half of the performance of the S&P 500, 53% in fact. And when you think about that, that really is not a very broad level of performance, right? You've got 7 companies driving over half of the performance of a particular index, then that's kind of narrow, right? If it's only 7 out of 500. In fact, one of those Magnificent 7 companies actually contributed over a fifth of the return. NVIDIA accounted for 21% of the return. So one stock in the S&P 500 generated 20% of the return of that index for the year. So an interesting year, that is for sure, that saw a lot of the trends from 2023 continue. Layered on there, of course, was the reversing of course from the Federal Reserve that further helped to drive performance throughout 2024 as they started to cut rates. Think back to 2023. They were still kind of in the mode of raising rates. So I guess now that the year has officially ended, we know the exact accuracy of last year's, the fearless forecast that we did a year ago. Projected Dow at 41,500. It closed Tuesday at 42,544. That's within 2.5% in terms of what our expectation was for the markets in the year 2024. I would say within 2.5%. That's pretty good. So not too bad on. Nice to see that our expectations for the year were in fact was what in fact played out. So that is good. Our prediction for this year at 45,000. So check out the program a year from now to see how close we came on that. Also, if you're interested in getting a little insight into some of the reasons why we were projecting that for the year 2025, the 45,000 mark on the Dow, make sure you check us out on our website at nelsonfinancialplanning.com or visit any of your favorite podcast platforms and look up that show that we did last week. Of course, we also do the show on video as well, so you can check us out on YouTube where you get to see us doing this show in our very own studios at Nelson Financial Planning. So for this week, with the start, this is the air date of this show is, or the original air date of this show is going to be the show will be the first show that we do in the year 2025. And so we're going to set the table for the year and talk about what we see as some of the dominant investment themes for the year ahead. And of course, a new year means New Year's resolutions. So we thought we would also sprinkle in some good financial New Year's resolutions to help maybe you get into better financial shape here in the new year. Before we delve into that, though, I wanted to start off with a couple of topics, sort of some quick follow-up, quick hits from a topic that we covered last week, and then another one that we've hit on several episodes over the course of the past few weeks. The last one actually had the pleasure of joining Simon Conway on his show, Good Morning Orlando, this past week on Monday to talk a little bit about. So last week's topic that we teased but didn't really get to was the whole question of, did you give or plan a gift of travel for the holidays? Now, this requirement that we're talking about here starts this week. So if you're traveling to the UK, the United Kingdom, okay, after January 8th, you're going to need advance permission regardless of whether you are a child or not. So this thing applies to anybody of any age, children included, and it comes in the form of an electronic travel authorization. So guess what? You got to go online to do that, or you can, download the app, because who doesn't need another app on their phone? Good luck trying to find it. I have that problem as well, trying to find all these silly apps. But what it requires you to do is obviously put in identifying information, as with everything else, and it also includes you to put in a photo of yourself. Yes, facial recognition is all over the place. And of course, a copy of your passport. And then there's a cost, 10 pounds, which in US dollars is about $13. So why are they doing this? Well, I think it's all about capturing information and tracking you under the point of enhancing security and having faster border crossing and things like that. But yeah, it's all digital and it's all facial recognition stuff. And the reality is that the U.S. has been requiring foreigners visiting to do stuff like this. So now I guess kind of a little bit of a tit for tat. We as Americans traveling abroad are going to run into this more and more. What's interesting about this ETA, or this electronic travel authorization, if you're going to UK, is it also applies if you're just sort of transiting through the UK. So if you fly to London on your way to Paris, okay, well, then you still need this form. Approval can take up to 3 business days. It is good for 2 years. But the reality is, and the reason that we talk about it on a financial show is, well, first of all, travel costs money. That's one of the many ways in which people use their money. But number 2, if you don't get this thing ahead of time, you could wind up actually spending a bunch of money and then wasting that, because it could really mess up your plans. I remember, and this was during COVID, where you're traveling, depending on where you're traveling, you had to get like advanced approval and QR codes and things like that. I remember somebody telling me a story of they were traveling to, I think it was someplace in the Caribbean, St. Martin's or something like that. And so it's family and they were going and everybody was excited. But one member of the family didn't get back the QR code that allowed them to get admitted. And then they weren't able to check in for the flight. And so because of that, they missed the flight. And then the entire vacation wound up going upside down. So this is certainly something you want to be aware of that can have some certainly major financial implications. Unfortunately, it's not just the UK. Beginning next summer, if you are traveling to any one of 25 European countries, you're going to need your face and your fingerprints scanned and logged into a new digital registration system. And by the way, that's not really optional. It's not like you can waive out because, well, I suppose you can, but then you're not going to be allowed into that particular country. And then most likely starting in 2026, U.S. travelers heading to Europe will need to meet a new prior authorization as well to enter. Welcome to the world of technology where all of your information, including your face, is captured. Sure hope that doesn't fall into the wrong hands. Anyway, we're going to take a break and continue. This is Dollars and Cents with Joel Garris of Nelson Financial Planning. So let's go there in terms of thinking about some of the investment themes that we think will dominate the headlines and the markets and correspondingly your investment performance during the course of this year, 2025. What's interesting as we sit here at the beginning of the year is that the business cycle itself, the economic cycle, appears to sort of be re-energizing. Corporate profits this year are expected to grow by 15%. And last year, in 2024, corporate profits grew by 10%. So we've got a business cycle that appears to be re-energizing, and corporate profitability continuing to be even stronger, or expected to be even stronger than what it was in the prior year. So from an investing perspective, we would encourage you to think about and look for those types of companies that are actually generating earnings, because the reality is that if generating earnings, and those earnings are going to continue to grow even more than what they did in the last year, that's probably going to be good for the individual price of that particular company's stock. So key concept is earnings. Earnings matter over time. The earnings of what a company makes ultimately drives its long-term value. So a particular concept that I think investors would be best position to make sure that they really focus on that in the year 2025. Looking further abroad, the U.S. continues to be the dominant economy, particularly as a result of its technological advances. All of this AI stuff is really boosting productivity at incredibly rates here in the U.S. I saw a statistic where there's now been 5 quarters in a row where productivity has been above 2% for 5 quarters in a row. If you look at the 5 years pre-COVID, there was only like one, or I think there's 2 quarters in that 20-quarter period of time where you had that productivity gain of above 2%. So you're really starting to see some interesting gains in terms of productivity, particularly related to use of technology. Specifically this AI thing. It's interesting to see how we use that around the office right now. We use Microsoft Copilot, not to plug a particular software, but like most businesses, we're all using the Microsoft suite of products, and that Copilot is the AI version of Microsoft. It's really a very valuable tool, and as more and more businesses start to incorporate that into their normal practice, that is obviously what helps to boost productivity. Another theme to sort of be aware of from an investing perspective is that if you're looking at a business or a company or an investment that has to borrow a lot of money, they're going to have to borrow that at higher rates than what they would have been able to borrow at just a few years ago. And so when you do that fundamentally changes your expense picture, right? Your amount of money that you have to pay to service the debt. If the debt is 6 or 7% versus, say, 3%, well, then that's a pretty broad spread. It also, of course, applies to consumers as well. So the investment concept there is to be careful about owning businesses or owning companies that have a tremendous amount of debt or have a need to borrow a lot of money in order to make their business model work. That can certainly be a pretty big drag in terms of the investment performance. Speaking of AI, the spend, if you will, on AI is really massive, and I don't just mean that as businesses of all size start to do more and adopt more of that. If you take just the big four that are looking to sort of be the leader in AI, and that's obviously Amazon and Google, Alphabet, Facebook, Meta, and Microsoft. Those four companies are collectively expected to spend over $500 billion over the next 3 years. Those four companies alone, the spend over $500 billion. That certainly got some major investment implications up and down the supply chain and into a host of sort of different parts of the economy. The other comment that we would make, which is a theme that we sort of saw develop in last year as well, is you're starting to see more companies than just the pure technology or pure growth companies start to do a little bit better, have a little bit more profitability. Traditional industries like defense or healthcare or energy or even banking, particularly with sort of a less regulatory environment, courtesy of the new administration, those are expected to do particularly well or see expanded opportunities. So the point of that is, as you think about kind of what that mix is, it's so important to check your overall sector allocation, particularly technology. Look, technology has been a big driver, not just for the past few years, but in particular last year as well. And but that pattern doesn't repeat indefinitely, and so that's why with our clients we always kind of run it's a Morningstar X-ray analysis, and that breaks out down all of the different sectors that are inside a individual client portfolio. It also breaks down the top holdings inside a particular portfolio, and really helps us to sort of help our clients make better investment decisions by looking at that. And I think as we reflect on these themes for the year 2025, it will continue to be pretty crucial to understand what that overall investment allocation is and make sure you're not getting too concentrated or too far afield in any one particular sector. Other areas of investing, you think internationally, certainly global trends would say that the international markets are perhaps priced more effectively or cheaply than the U.S. market. So certainly some opportunities there, particularly as you see some of the international industrial titans wind up increasing things like capital expenditures and things like that. So you could see some real opportunities there. On the more aggressive side, if you're investing in smaller companies, the valuation of smaller companies is kind of at 20-year lows relative to large companies. It's really been a cycle where large companies have dominated. So certainly some opportunities in the small company side of things. Emerging markets, preferences for India over China. China has some massive debt problems along with its demographic problem. India doesn't have those problems in the same form and function. So those are just some of the themes that we would encourage you to be thinking about for the year 2025. Obviously, since we do the program every week, you're going to hear more about those as the weeks and months advance during the course of the year. Bottom line on this, the key takeaway is to make sure your investments are well positioned, right? To take advantage of these themes. The start of the year is always a good time to sort of dig into it and do a reevaluation of your overall mix. And if you're not able to get a detailed report on what that is, the folks here at Nelson Financial Planning would be more than happy to do that for you for absolutely free. Take whatever it is that you have out there, run it through so that you can get a pretty good handle on what your sector allocation is and what your individual company allocation is. Might be a worthwhile tool for you to take advantage of us for that. So to do that, just visit our website, nelsonfinancialplanning.com. We'll be back after these messages. So it's the new year. Did you take some time to make some New Year's resolutions? At this point, I don't think I'd bother with that. Maybe you did, so congratulations. Hopefully, the original air date of this program is January 5th, so hopefully you didn't make them and then already break them. In this segment, though, we're going to give you 5 sort of practical resolutions that are really designed to sort of deal with some of the issues that we as Americans, unfortunately, as a whole, feel in the pinch of. And that has to deal with, kind of the expansion of technology. That's part of it. But inflation, which while it has come down, it still, the cumulative impact of inflation over the course of the past several years has certainly been a major factor in a lot of people's finances. And then with that, of course, comes debt and debt loads that unfortunately way out of control for most. So with these sort of resolution suggestions, we want to take some time to sort of focus on those types of issues that are unfortunately the biggest problem for most Americans. So one of the things, and obviously if you're regular listeners to the program, then we talk about this a lot. It's kind of like a trip to the dentist office when we talk about it, but it really is valuable, right? Much like, you kind of need your teeth because, you got to have them to chew and stuff. They're good for health. Doing a budget is also good for your financial health. The importance of making one, of making it realistic, and then most importantly, sticking with it cannot be understated. The point of that budget is to really require you to sit down and go through in detail, okay, how much money am I bringing in? And then what's going out? And more importantly, where is it going when it goes out? So very important that you, if you're looking to improve your finances here in the new year, that you really sit down and try and determine and create that budget. One of the very first chapters in our book, Next Gen Dollars and Cents, focuses on that very topic, creating a budget and sticking with it. Matter of fact, I think on our website, we have a sample budget that you can use to really work with and to try and create your own budget. So, but bottom line, start the year out right, create that budget, and it's okay to adjust it along the way. You're not going to get it right out of the gate, but as you adjust it, make it more realistic, and most importantly, really try and stick with it, you'll find that that will be the single biggest way in which you can really help to improve your overall finances, which then I guess would lead to the next goal that you might have this year, where you may want to save more money. Well, the budget's going to help you do that. The first things first, though, what we always encourage people to do is to make sure that they have saved some money for their emergency savings, right? That is, as the name describes, that is savings that you use in the event of an emergency. Maybe that's a car repair, maybe that's a house repair, whatever the case may be. The point of having an emergency savings account is that there's a bunch of cash there, so you don't have to use a credit card or borrow money when emergencies happen. So that's one of the very first things you want to do to get back on, or to get on a firmer financial ground, is to start to put some money into that emergency savings account. Another thing that I think sometimes gets overlooked is, particularly, I guess, here at the beginning of the year when you have an opportunity to sort of select benefits, things like that at work, make sure that when you are contributing to that employer retirement plan, whether it's a 401k, a 403b, simple, whatever the case may be, make sure that you are contributing enough to get all of the employer match. Remember, that's free money, and so you want to certainly take advantage of that. Next up in this one is one that is probably eliciting more pain, particularly in the current environment as you have higher interest rates. The credit card company interest rates have certainly gone up even more. Not uncommon to see and hear interest rates on credit cards 25 to 30%. That is a huge amount of interest cost that makes it really difficult to get to the point where you're actually paying off the principal on any type of credit card debt. And the numbers are staggering when we start to look at credit card debt in America today, particularly post-holidays when people have a tendency to kind of overspend. 1.3 trillion is the latest number that Americans have in credit card debt. With those rates of 25 to 30%, you're going to have a hard time getting ahead. So one of the goals for the year would be to reduce your credit card spending so that you can then focus on paying down and ultimately paying off that credit card debt. Another comment, obviously, is this lingering impact of inflation, right? The cumulative impact from inflation. It's one thing to say, oh, inflation's lower than what it was, or inflation's not happening as much as it was. But what gets forgotten in that is that inflation has a cumulative impact. And we see it in the price of milk and the price of eggs and the price of a postage stamp, if you're still sending letters by mail. The reality is that those types of increases really do have a major impact on your finances. So don't be afraid to kind of look for some deals, right? Use some coupons, get some 2-for-1s, all of that kind of thing. Those are certainly out there and available. And then the other part of that is that developing good financial habits and really focusing on paying bills on time. That's a pretty significant way in which to get your finances in order, because once you start to pay those bills not on time, then that's when late fees are going to apply, and then even higher interest rates are going to apply on any kind of revolving debt that you might have out there. So good way to fight back against inflation is to make sure you're not having to pay these very high credit card rates, and being a savvy consumer, using those coupons and looking for good financial habits just overall. And then lastly, and this I guess goes hand in hand with what we were talking about earlier in the program about how if you're traveling as an American now, starting this week, for example, to the UK, you have to fill out an electronic transfer authorization form, or electronic travel authorization form, which is a way in which you submit a picture of you and a copy of your passport and all that facial recognition stuff. It does lead one to say, well, I probably for a New Year's resolution want to add in protecting my identity, particularly in today's world. So you certainly want to be savvy on that. Change those passwords on a regular basis, make them more difficult in terms of what you are using regularly. Certainly important to sort of protect yourself and your identity, because my goodness, a lot of that information is getting shared out there on a regular basis. So those are just some of the things to be thinking about here in the new year. Some litany of financial resolutions that you can incorporate into your daily life that hopefully will make 2025 a very successful year for you from a financial perspective. With that, we're going to take a break here on Dollars and Cents with Joel Garris of Nelson Financial Planning. So, quick follow-up before we get too deep. I mentioned this at the beginning of the program. It's our last segment here on the program, so we wanted to make sure that we mentioned it in more detail. This is an update on the beneficial ownership information reporting requirement. This is the whole thing that requires small businesses to register and submit owner information along with a copy of your driver's license, passport, through the U.S. Treasury Financial Crimes Enforcement Network. If you go into our podcast archives or our YouTube video archives, you'll see we've certainly talked a lot about this over the course of the past 12 months. It was supposed to be required that all companies had to do that, or small companies, because if you're a large company, you don't actually have to do it. Then you're supposed to be required to do that by year-end 2024. But there is a particular legal case, the Texas Top Cop Shop Inc. out of Texas, that is making its way through the court system as as are a number of other cases. But the Texas case in particular has had success at getting an injunction to stop the requirement to file these information reports. It was appealed to the Fifth Circuit. The Fifth Circuit basically flip-flopped on it, said, okay, no, we're not going to let that injunction stand, and then came back and said, yes, we are going to let the injunction stand. So as things stand right now, then the U.S. Department of Treasury has taken it to the Supreme Court, looking for a sort of a stay of the injunction that was issued at the district court level, and we'll see whether the Supreme Court rules on that or not. It's a bit of a legal saga, which makes for a lot of confusion among small business owners. The reality is that what will most likely happen is that if the Supreme Court stays the injunction, then you'll be given a period of time in which to file the report that normally would have been due and filed at the end of the year. Had the pleasure of joining Simon Conway on the Good Morning Orlando, ultimately talked a little bit about this with him earlier in the week. Stay tuned, I guess, is the answer on this, because the reality is that it is an ongoing thing. I'd like to think that this might sort of magically disappear, but the problem is it was part of a congressional act that passed back in 2021, so might be hard to get this requirement to just disappear thanks to the Corporate Transparency Act of 2021. But obviously stay tuned. That's what we're here for, is to kind of keep you informed and along the way on any kind of developments like this. That's, of course, the purpose of the program here on Dollars and Cents. We would also urge you to make sure, as we sit here in the new year, the prior segment we were talking about some of those New Year's financial resolutions in order to make yourself in better financial shape during the course of the year. And that's certainly something that I think most people would want to strive for during the course of any particular year. Also, don't forget our investment themes that we talked about earlier in the program. Certainly, the year appears to be a year where you're going to see continued corporate earnings. So make sure that your portfolio is designed to own quality companies. Companies that are actually making money. The more money a company makes, the more likely its stock price is going to continue to go up. So a real key concept in terms of looking at quality companies that are earning money. Similarly, beware a business that has to borrow a lot of money. Borrowing costs are going to be much, much higher, particularly in relative terms. Not so much out of line with sort of historical numbers, but relative to where interest rates were 3 years ago, interest rates today are much higher. That has an impact on a business that has to borrow a lot of money for its ongoing operations, because obviously when rates are higher, then that business has to pay more money to borrow the same amount that it did a few years back. So a key concept there, if you think about it from an investment perspective here in 2025, AI is going to continue to be a big part of the conversation. The spending is going to be enormous. And we're not talking about businesses as a whole, just those 4 large companies that are all kind of in a race to be the leader of the AI pact. So that's Microsoft, that's Facebook, that is Google, that is Amazon. Those 4 companies over the course of the next 3 years expected to spend about $500 billion. That's a whole lot of money. That's going to have some pretty significant investment implications. Also linked to that whole conversation about AI is the gains in productivity and what that's going to do for companies that maybe have to employ a lot of labor, but through using AI, maybe they don't need to employ quite as much. as they once did. That's got some pretty significant implications, or will have some significant implications for those types of companies, because it really could increase their earnings pretty significantly, especially if they can reduce or eliminate some of that labor costs. And then know that the market itself is beginning to broaden. More companies in different areas, different industries are showing a significant level of earnings. So the point there is that, as with anything, as you're starting the year, you really want to take it as an opportunity to do a little health check, do a little checkup, if you will, and really take a look at how your investments are positioned in terms of sector allocation, in terms of company allocation. That's one of those things that at Nelson Financial Planning, we do that for our clients, and we'll do that for you for absolutely no charge at all. We'll give you a report that shows you exactly what your current mix is, where the risk is, where the sector allocation is. All of that you can get by going to our website at nelsonfinancialplanning.com, or if you want to pick up the phone and give us a call, we got live people that will answer the phones as well during business hours, 407-629-6477. That's the number in which to reach us, so that we can take a look at that overall investment allocation and make sure that as you go into a new year where you're going to have different investment themes, maybe a lot of these investment themes are certainly going to dominate the year, but there's going to be others that will occur that we haven't talked about that will be equally important. So you certainly want to make sure that you're on the right track. As we mentioned, thinking a little bit about it from an international perspective, the preference from if you're looking at more aggressive parts of the market, particularly emerging markets, India looks to be a better story than China. The debt story inside of China is just staggering. I read a statistic this past week where there's more, the number of empty units in China represents like half of the entire amount of units available here in the U.S. I mean, it's just a staggering amount of money that has been borrowed in China to build all of these buildings that fundamentally nobody is actually living in. So, plus they got that whole demographic problem courtesy of the one-child policy. So those are kinds of the investment themes that I think we'll continue to see play out during the course of the year. And of course, thinking about those financial resolutions for the year 2025, if you'd like to get a copy of our book, Next Gen Dollars and Cents, visit our website at Nelson Financial Planning. Maybe spend some time focusing on Chapter 4 that has the fundamentals of budgeting and how you create one, along with a downloadable worksheet for a budget as well. Well, I guess the year is off to a start. The reality is that we will wrap up our first program of the year 2025, and we'll be here every week between now and the rest of the year. Along the way, if you have any questions or if there's a topic that you would like us to cover on the program during the course of the year, reach out to us through our website at Nelson Financial Planning. We certainly do our very best to stay on top of all of these different topics and changes along the way, and use the program as a platform to inform and educate you. We're in the process of putting together our top 10 tax changes. We suspect that there's going to be a lot more of that discussion during the course of the year as well. So here to help, as always, we're going to wrap on up and get on out of here. This has been Dollars and Cents with Joel Garris of Nelson Financial Planning.